Well, auto stocks are top sectorial gainers today, led by multiple triggers. Eicher Motors is the top gainer on the Nifty, led by a good quarter in the third quarter. Tata Motors CV surges on massive order coming in from Indonesia, while strong earnings also keeps Samvardhana Motherson higher in trade today.
Apollo Hospital delivers a stellar third quarter with performance from all segments beating expectations. The management also tells CNBC-TV18 that volumes in the hospital business are likely to improve further. The stock rallies 5%.
Britannia is the top gainer on the FMCG index. The stock rallies on strong margin expansion and growth momentum across categories in the third quarter. Nomura is also bullish on the stock. They have a target price at 7,000 rupees a share.
And BHEL is the other stock that has been under pressure today, and this is because they have announced an OFS which is at a discount of 8% to yesterday's closing price. That is the reason that the stock is falling in grade.
Afcon's infra is under pressure. The third quarter profit falls 35%. East Indian Hotels too slumps on weak numbers as profit falls and margin contracts in the third quarter.
Hello, good morning. You've tuned into Chartbusters, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Nigel D'Souza as always. Nigel, good morning. Today I'm going to say that both of us are anchoring and now the markets have recovered from the day's low. It's again in the green, 25,970. So closing near that 26,000 mark.
Always good to have you on the show, Vinny. Busting the charts as always. Good to have you in. Well, we've got a couple of management, so let's get straight to that. Let's welcome Mr. Yogesh Malhotra of Gravita India. They have gone ahead and they've done some inorganic growth. And this time around, they are looking at the copper space and Rashtriya Metal Industries. That's the company that they're looking at. Hi, Yogesh. Good morning. It's been a while since we spoke. Congratulations first on this particular acquisition. The street was wondering whether you're going to go into non-lead. Will it be plastic? Will it be aluminium? Out of syllabus this came. You're gone into copper. Give us a couple of details though. First, by when does this particular deal get closed out? The transaction that you're looking at. Point number one. Point number two is, how do you fund it? You'll have some money, you'll raise some money via the QIP. So how do you fund it?
So we are expecting this deal to close by 31st of March. As far as funding is concerned, I think our overall plan is around to spend around 1,200 to 1,300 crores in capacity expansion by FY29 to take our capacity from current 3.3 lakh tons to around 7 lakh tons. Which includes greenfield projects, brownfield projects, and merger and acquisition opportunities. And it would also require an additional working capital of around 1,000 crores. So all this will come from our internal accrual and some surplus from the funds that we raised through QIP last year.
Okay. And this 565 crores
is included in this 1,200 to 1,300 crore.
Okay, it's included. So you won't be taking any fresh debt on your books, right?
Not right away, no.
Okay, let's focus on the acquired asset. Then we have the profitability. EBIT is close to around 60 crores and EBITDA, and you have revenue of around 900 crores. What is the revenue potential of the asset that you're acquiring? If you could help us out with that. And how do you see it grow? Because it's moved from a 550 crore revenue number to 900 crores very, very swiftly. So if you could help us out with that.
So copper demand is increasing. I mean, it's very, unknown fact now. So the ROIC currently is around 14% and the PAT last year was around 27 crores, I think, yes. And it comes to us at a very good valuation of around 10 EV to EBITDA ratio based on the FY25 numbers. But there is a great opportunity to grow here. I mean, if you look at the total capacity utilization, it stands currently at around 50%. And there's opportunity to improve it to around 65 to 70% by doing some debottlenecking of existing capacity. And then, of course, there is opportunity to increase the current capacity also to around 50,000 metric ton per annum to meet the increasing demand of copper products, which is already planned, but was put on hold as the current owner wanted to exit. So both capacity expansion and the better utilization would probably give us good growth opportunity in this asset.
Okay, good growth opportunity in the asset. Yogesh, I also just want to understand, you're completing this by 31st of March. You'll start seeing the synergy benefits coming in from FY27, I believe. And obviously, what does it mean for margins? Because seems like at least FY25, what I'm looking at, your margins for RMIL was around 6-7%. What will it mean for the company's margins?
So there are going to be some synergies in place because they are using some scrap for their products. We would definitely optimize on that, which is our strength. And on the marketing level also there would be some synergies because in some of the sectors that they are present, we are also present. So that will optimize our marketing effort also in those segments. But apart from that, I mean, if you look at, as I mentioned, that the current capacity utilization is a bit lower at 50%. So by debottlenecking the entire capacity, we would probably improve those margin numbers also going forward.
Okay, and you said that you want to take it to around 70%. Just if I look at it mathematically,
yes.
it was doing around 900 crores. So say in FY27, it could contribute close to 1,200 crores. Will that be fair? Last year, 25, it did 900 crores odd. This year, there'll be some growth. Next year as well, there'll be some growth. So FY27, around 1,200 crores from this asset?
Yes, definitely.
With margins of around 8-9%?
So too early to say that, but definitely we are looking at that margin number.
Okay, high single-digit margin, or do you want to extend it to double-digit?
High single-digit margins, yes. Right.
All right, got that then. So there are synergy benefits as well that will be worked out. Normally this copper business is a working capital intensive business. And sometimes, that gets stretched a little bit. How do you plan on, mitigating this risk? And also if you could tell us the ROIC for your core business, I think it's 20-25%. You've been mentioning that as well, that you want to hold it around 25%. Now the acquired business is at around 14%. So how do you see this pan out for the company on the whole?
So the business is very similar in nature to our current business, and the current working capital cycle is around 80 to 90 days and would not have any adverse impact on our existing working capital cycle. Going forward, we see some improvements on account of better capacity utilization, as I mentioned, and the ROIC also, which is currently at around 14%, because of the same reasons of improved capacity utilization and the growth opportunity that is there to optimize the overall capacities, and not to mention the benefits that will come out of backward integration when we start recycling gears. As I mentioned, that they use part of recycled products, but it's not optimized yet. So all these will, we are very confident, lead us to that 25% ROIC from this acquisition also, once everything stabilizes.
Okay, 25% ROIC is what you're saying that will come in even from this acquisition. Post that also you will be able to see that. Yogesh, could you help us maybe with the outlook for your core lead business in terms of volumes as well as EBITDA per ton? What are we watching out?
So lead business would continue to grow at around 18 to 20%, and the EBITDA numbers would also stay stable at around 19 to 20 rupees per kg. We have some capacity increases lined up at our Mundra and Phagi plant, which is expected very soon. So overall, I think we are well on course to achieve our 2029 targets of around 35% growth on bottom line numbers and 25% growth on the revenue numbers from lead as well as other verticals that we are having right now.
1,000 crores of EBITDA by FY29, should that be possible?
So it all depends actually, but we are on course to achieve what we mentioned that we would do. Exact numbers would probably not be right now, would not be possible for me to just tell you right now whether it will be in 29 or 2030. But we are very on course to achieve our targets of 25% revenue growth going forward.
No, sir, the reason I tell you that is, see, on a quarterly run rate, you're doing 130 crores. Now, that means you're doing already 520 crores of annual EBITDA, right? Then you're talking about growing by close to 20% at least,
yes,
for the next few years. Add to that, this asset will contribute close to under 100 crores. So 1,000 crores of EBITDA is possible by 2029, 2030?
So definitely possible, and probably could come a little sooner also if we go and acquire some better asset going forward. So it's only, so what we are doing is, what we are planning to do is whatever we are doing, let us focus on that. Let us focus on growth, and the numbers are just the byproduct of all
and you're hinting at another acquisition?
No, not right now, not right now. But there are opportunities. We are looking for these opportunities. As I mentioned that, the growth of 25% would come from both brownfield projects, greenfield projects, and acquisitions. So these things are interchangeable. You can't expect exact numbers from all these things. So there definitely are possibilities. If we get something at the right value, we would definitely go and acquire those assets also going forward. But not right now. So we are targeting quite a few acquisitions, both in India and overseas. But whether those will materialize or not, all depends on how it goes.
Okay, all depends on how it goes. But Yogesh, thank you so much for joining us this morning, talking to us about the new acquisition that you've made. EBITDA, we'll hope for the 1,000 crore, FY29, FY30, and synergies will start coming in from FY27 for this new acquisition as well. On that note, we're going to step into a very short break. We'll be joined by Yash Sharma of Ganesh Ecosphere to discuss their earnings as well. So stay tuned in. Welcome back to Chartbusters on CNBC-TV18. Let's bring on board the next management for today. We have Ganesh Ecosphere's Yash Sharma, who is the director at the company, to talk to us about the outlook of the company going forward. Q3 was a bit of a turnaround quarter that came in, especially in terms of profitability for the company. Revenue was a bit muted. There were a few challenges that came in from the company due to some regulatory issues. What will that mean for the company going forward? We'll discuss all of that, as well as the outlook in FY27, as well as end of Q4 FY26. What's the expectation there? Thank you so much, Mr. Sharma, for joining us on the show. Let's start by talking about the regulatory issues. Those are the specific challenges, which is leading to a bit of a problem for the company in the last few quarters. Could you update us on what is the recent notifications that have come in here from the Ministry of Environment, Forest and Climate Change, and what does it mean for the company? Will it start easing off in Q4 and onwards?
Yeah, thanks. So yes, the regulation to start using recycled content in all rigid applications is already there. What happened really last year is that on June 3, 2025, due to shortage in the capacity to produce food-grade recycled PET material was there, so the government came out with a draft notification saying that, okay, we understand there is a capacity shortfall, so you can carry forward the shortfall over the next 3 years. But what really happened as an aftermath of this draft notification is that the industry started reducing and started postponing their usage of recycled materials for the future. This really led to reduction in the volumes, reduction in the market size, and at the same time, a lot of capacity got added and got implemented in India. As of today, the draft notification has not been converted into a final notification, and we are still awaiting the final notification from the government side. It's very important to understand that the regulation is already there. It's already live. And as per our feedback and interaction, very soon we will be hearing the final notification from the government, which will be mandating the use of recycled content. And definitely for the next year, the target stays still the same and strong at 40% of recycled content.
Yash, this mandate, there's also a thing that is coming in that brands will face a 40% recycled content mandate, right? From FY27, I believe. Is that right?
That's right.
So then what does it mean in terms of visibility for you, long-term agreements? What are the talks that you're having with brands as well then?
So definitely we are in talks with all the global brands and as well as the national brands in India to supply high-quality food-grade RPD to them. A lot of long-term agreements are already under discussions. Everyone is just awaiting for the final notification to come out with the revised targets. But
then will you start seeing a growth? Sorry, because right now Q3 was muted. So in FY27, could we expect growth to come back?
Yeah, definitely. We are expecting that from FY27 onwards, the industry should come to very good utilization levels, because now there is ample capacity to meet the regulatory demand. And the brands will be starting to use the material in a very big volume way.
All right. Hi, Yash. Good to see you. And sometimes that happens, right? You brace yourself for a good time, and unfortunately, the regulation doesn't come through, which puts the business into a bit of a tailspin. Give me a couple of details. Your legacy business seems to have done pretty well in the last quarter. So tell me, what is the capacity utilization levels, both in the legacy business as well as the new business, the RPET business?
So in the legacy business, we are running at almost at north of 100% utilization levels. We are producing at the very optimum and maximum possible capacities, and even the sales are doing quite well.
Okay.
And offtake is also doing quite well. In terms of subsidiaries, we are currently at around 50 to 55%, which we are expecting to improve.
Okay. Improve to what level?
So going forward, I think immediate improvement we see around 70%. But going forward, I think in FY27, once the new year starts and the brands start to implement the 40% regulation, it will be much better.
Okay, that's the hope that you have out there. Got it. So you're saying that implementation, but is there any risk to that implementation FY27? And then there'll be a risk to you moving to 70% also?
See, I don't think there should be any risk to the FY27 targets, because the reason for which the FY25-26 got rolled back was at the start of the year there was a capacity shortfall, and that was the basis of the industry getting leeway from the government to postpone the targets. At present, the situation of India is that we have ample capacity to meet the 40% targets. The capacity which is already approved by FSSAI and which is under already approvals. If you take the total number, we are on way to reach the 40% capacity number of the demand of the market.
Got it.
There's the grounds for them right now to change any regulatory.
Okay. All right. Yash, and you believe that the realizations as well have bottomed out, which were under pressure?
Realizations really depend on the raw material prices, Nigel. What happens is our finished goods prices are a cost plus to the raw material prices. Now, since the demand of recycled content crashed, the raw material prices has also crashed as well, which obviously led to low realizations. So for us, it's like a cost plus mechanism for the finished products.
Okay, Yash, final question before we let you go. You used to do an EBITDA of around 50-55 crores. That came down to around 20-25 crores. Now we have seen an improvement on a sequential basis. That's why the street is excited. Do you believe the EBITDA margin and the EBITDA number in quarter 4 will be better than quarter 3? And do you see an improving trajectory from here on? And you had put money as well at around 1,035 rupees. What do you have to say to your shareholders? The stock has come down by nearly around a third from the top.
So Nigel, yes, our EBITDAs are improving. This quarter, we've done an EBITDA console level at 30.73 crores, and definitely we are expecting improvement in the overall performance in the coming quarter as well. Albeit a marginal one, probably in this quarter we're expecting. But going forward, definitely as the subsidiary businesses ramp up and the utilizations improve to around 85 to 90% levels, we'll definitely see a big jump in the overall financial performances, which we are very, very hopeful for in the coming in FY27. Now coming to the valuation and yes, the promoter had infused about 150 crores on warrants in January 2024 at a price of 1,035, which was the SEBI price mechanism at the time. We think that after that, a lot of value creation has happened in the organizations. We have created massive capacity to supply RPET to the industry, filament yarns. We have created a very strong brand in the country, which has been very, very successful till so far in the industry to cater to the regulatory demand, which is going to come up, if not today, tomorrow. And I think there has been a lot of value creation, just that we are waiting for that market to be created to encash that value. So I definitely think that there's going to be a massive value creation going forward.
And all those warrants have got converted, right?
Yes, that's correct.
Okay. All right. Thanks a lot for joining in, Yash. We'll have to watch delivery because, the last quarter was a little better than the previous one. But as you're saying that things should improve from here on, we'll have to track that on that front. Appreciate you joining in and giving us all of those details. For the time being, slip in a short break, come back, more on the markets and stock-specific action.
Welcome back to Chartbusters on CNBC-TV18 with the Nifty in the green, but the mid-cap that's given up some gains and trading in the red. So broader end of the market seems like some bit of pressure, at least for the Nifty mid-cap. Banks still managing to hold on to that slight bit of a green there, but we are absolutely out of time on this edition of Chartbusters. Thank you so much for tuning in. Up next, your trading hour.